Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Wednesday, the 28th of March, 2007, and we're going to take a look at some stocks for trading on Thursday. I've got shares of ADTRAN, symbol ADTN, on the screen. First, we're looking here at a weekly time frame, and you can see that the stock has made a pretty nice, what looks to be a pretty nice bottom here over the last 9 months or so. And it recently broke past that resistance that I just drew in at about $24 a share. And now it looks like that level has been tested and could be acting as support. So if we look here, this is actually classic cyclical analysis. Stage 1 accumulation here, followed by stage 2 uptrend. We get the moving averages crisscrossing, which represents indecision. Then a breakdown from indecision there for distribution up here. Breakdown occurs right here, stage 4 decline, back to indecision, stage 1, and now it looks like a stage 2 uptrend. So looking at the daily time frame, you can see here that the stock did break out a couple days ago and has pulled back on lighter volume. We had pretty heavy volume today, but the buyers were able to take back control from the opening price at least. And it broke past this level of resistance. You see that's now acting as support. So we had a nice little ascending triangle, or whatever you want to call it here. But this resistance now looks like it's acting as support near 24.30. We've got the 10-day moving average above the 20, which is above the 50. So when we drill down to a shorter term time frame, you can see it got pretty ugly in there today. But the stock did recover very nicely. So in spite of market weakness, I think this was dragged down by the market, but then buyers reemerged. So what I'd like to see here in order to buy this stock would be a pullback to about that 5-day moving average. So let's say pull back to $24.15. Then we'll buy it on strength above $24.25. We'd then put a stop at about $24.08. So that would give us a risk of 17 cents. And I think you're going to see at least $25 a share on this stock, perhaps even higher. But let's, because of the overall volatility, let's keep our targets pretty conservative, and we'll risk 17 cents in this case for the opportunity to make about 75 cents if it does reach that upside target. Investors might want to consider this stock too because of the longer term, nice looking weekly, will be setting up to a stage 2 uptrend. CYTR is a symbol for CytRx, and you can see here on the weekly and monthly chart that it's up near all-time highs. The stock rallied on big volume over here, pulled back on lighter volume. We had another volume move right in here, and it's been consolidated on light volume once again as that 10-day moving average now back up to the 20, which is above the 50, and they're all advancing. The stock is low priced, but the average daily volume is 2.2 million shares over the last 20 days. Nice little pattern in here today too. There's two ways you could play this. I'm going to tell you the first way that I'm going to likely get involved, which would be to buy the stock above $4.85. First, we'll just outline that. So if I buy it above $4.85, I think you put your stop at about $4.68. So that'd be a risk of 17 cents. And looking at the daily time frame, I think you're going to see it up near about $5.50 a share, where it's where it was about a month ago. The second way to buy this stock, I think, would be maybe to buy it above this level of resistance right in here, about $4.93, $4.95. That could be the better buy, actually. So maybe you want to buy a little bit above $4.85, then add to it above there. You're going to have to figure that one out for yourself. I'll probably buy it in little pieces, just again because of the overall uncertainty in the market. SONE is the symbol for SONE Corporation. We've been looking at this stock for a couple weeks. It hasn't done anything yet. Maybe about a week and a half we've been looking at it. It did diminish on come in on diminishing volume. A little heavier volume in there today, and can't really tell much. But if you look at the weekly time frame, the stock really looks like it's setting up similar to ADTRAN in that it looks like it's heading into a longer stage 2 uptrend. And I think it could probably go at least up to there. That's not going to be our target. What we're going to look for in here is to buy the stock above $6.05 a share. So that's basically the high of the last 3 days or so. And getting above 6.05 would turn this declining 5-day moving average advancing again. So buy it above 6.05, put a stop at 5.89. That's a risk of 16 cents, and I think the stock makes it up to about $6.50 a share, and that will give us a target that is 45 cents away. CDWC, that's the symbol for CDW Corp, whatever the heck they are. But the stock here on a weekly time frame, you can see it's busted down. It has this pattern of breaking down on heavy volume, followed by diminishing volume on the rallies before another decline. That's a classic pattern that you're looking for in a declining stock. That is, that it advances on diminishing volume and rallies on lighter volume. So now it looks like the sellers are back in control of this stock, and looking at a shorter term time frame, it's kind of dropped down a little bit here the last couple of days. So let's look for a rally up to about $61.35, and then sell the stock short below $61.20. So a little bit of strength first, then sell it short. We then put our stop up at about $61.78 a share, and that'd be about 43 cents, in other words. And I think that you can see the stock back down to these lows that it saw back in middle of the month, March 14th. 59.50 though looks like a pretty good target to me. That would be $1.85 for 43 cents of risk if that were to unfold as I just outlined. CMED is the symbol for ChinaMed Technologies. I do own puts on this stock. I actually have owned these puts for about a week and actually held it through this, which is very uncharacteristic of me. But fortunately, it's working out, and now the stock looks even better on the short side. You can see that this level in here has been pretty important for the stock, this $23.5 to $24 level. Looking at the weekly time frame, it looks like it could drop pretty good. Hopefully, to at least the $20 level. I'd like to see it around $5 or $10 a share, but that might be being a little bit greedy and asking too much. Here's what we'll look for. Look for a rally. Stock closed at $22.77. Let's look for a rally up to $22.90, and then sell it short below $22.75. And we then put our stop at about $23.05. That would give us a risk of 30 cents. And I think the stock realistically, let's look for it to test this low right here at $21.65. So that would give us $1.10 of opportunity potentially for a risk of 30 cents.